Hey, everybody, welcome to May 2022, 2026 coaching call. We're going to take a look at the Bitcoin market context here. So I mentioned, I think it was yesterday or the day before, that we could get a pause here and a slight bounce, but that based on the momentum indicators, right, and the context of breaking the trend line now, we have a short-term bearish bias as we broke, actually intermediate-term bearish bias because we broke this almost 2-week balance breakdown now. It's popping back up into it. We have resistance now. You have this head and shoulders pattern. But momentum wise, which is really good, obviously CCI on the daily is really great for day traders day to day. You want to use something like an RSI stochastic or an RSI divergence indicators on the weekly for a little bit of a longer time frame. But I mentioned yesterday that if we couldn't get past this trend line here, that it was going to be an invalidation of a trend line breakout setup. So if it didn't break out from this trend line, then we were not going to have good odds for momentum into the next day. Now, what happened the next day was that we got this sort of an indecision candle, right? When you have a tight doji like this, come up here, it often can mark the end of the little up move here. We also talked about in real time today that not only was the trend line breakout setup invalidated, which means we could go down, that it was also making, as we came up in here, due to the separation of the turbo and the CCI over the zero line, an inverse zero line reject setup, which is a bearish setup, smash. And I also said that we had a good chance to retest the 50 MA. Now, from just a trade idea, for a day trade idea perspective, I was like, okay, well, maybe when we get down there and if we make a double bottom at the 50 MA, maybe buyers could be short-term active because we might have been too exhausted. When we got down there, it felt really heavy. You could just see it on the smaller time frames. This is when you want to overlay your execution matrix onto your daily call plan, right? This wasn't a wide intraday double bottom, and we had momentum with a strong candlestick down into it without this action reaction that we had previously the last time we tested this support zone, which represents this high volume node. Now, coming down here again, you did have the confluence of yesterday's low now adding to the strength of this zone. But remember, if we zoom out and look at the context of where we're coming from, we have a bearish potential bigger picture pattern with the head and shoulders that we talked about. We broke the trend line. So, the rotation of the failed rally potentially could be over after hitting the 200. Now we could have a bearish larger time frame bias with the failed rally. So all those things were against that. Now I did go in a little bit, and when we didn't get a strong bounce, my intuition was like, there is not a strong wide double bottom. The odds are in favor ahead of time anyway for the Bears. So I didn't like this lower time frame context. I got out slightly below break even before it became a larger loss, a full stop out, no thanks. Small losses equal trading success. I shouldn't even have been in there to begin with. I wanted to short right here because I missed this resistance zone pop back up into yesterday. I didn't think we were going to get even to the high of the day. I mentioned that as well. I did have a resting order at the high of the day to short it, but we didn't get there. Instinct was to short this as this was breaking down at 9:30, but there wasn't a super amount of pre-market context for a trend, so I decided not to. All in all, I'm happy with how the day went, kind of a give back Friday. Remember, I am betting from a portfolio management perspective that this is not the low. There was no reason to reload here underneath the 200. I thought that was a bad move. Zooming out, Bitcoin always drops between 50 and 68% of here historically, and then would based on taking about a year for a bear market every single time, 3 years for a bull, means October would be the lows, okay? Now, I think that we could get lows before then and start bottom building. That's the idea. I think we're going to crash pretty hard. You're already seeing a sharp bearish engulfing. I mean, all of a sudden, this bullish balance breakout pattern to all the moon boys were talking about how it's going to be unstoppable. And this time's different. All now looks pretty bad. We have a bearish engulfing candlestick pattern right on the week of May 11th that I said would be the resolution of either a breakout or a breakdown. I said the odds were for a breakdown, and that's what's happened. What you didn't see there is like three or four, the next 2 days being tight doji days of more sideways indecision. This inflection point represents something is going to resolve there. You have to do a little bit more of a deeper analysis to get the direction of the inflection, but you know that there's going to be a resolution to the rally. There was basically a bear market rally here. We rallied higher on this time frame, but into a larger bear market rally. I'm sorry, bear market, because we have two confirmed lower lows. So that's that. We are in a bear market. That's it. We also, just from a slower perspective, in the overbought category prior, we have the crossover of the orange over the blue, which is what we would need for a weekly momentum bearish divergence. What would confirm it is if we close this Sunday below 80. What will probably happen is that we go sideways up here for a while. They switch roles. The point is it starts to flatline here. And then what you might see, price might try to make even a higher high. And then this will make a wide divergence and it won't. That's another good one. And then, of course, once you start to see the momentum down, then the orange crosses over the blue, confirming. By that point, you should already have been making your decision. You're already seeing these things ahead of time. So we did get the poor man's hook from extreme on the weekly. I told you also, guys, I back tested that inverse zero line reject on the 2 week, which was very pronounced here with the blue overshooting and the CCI not even be able to, the turbo overshooting. That was classic. I back tested maybe 13, 14 of those, and 90% of the time they worked out that the inverse bearish zero line reject would in fact be bearish. So as this was coming up into there, we didn't want to get excited to reload because we saw this bearish inverse zero line reject. We also then zoomed down on a 2-day just to gauge the momentum of a multiple time frame trend. You could see that every time we came up into this trend line, there was a bear market reversal in terms of momentum. And these even marked pauses and pullbacks in the bull market. You see right here, calling for a pullback. We got a major one. Now it resolved to the upside and we did make new highs at that point. But at that point, you had multiple, triple, quadruple bearish divergences. Really no reason to be in the market when you have multiple, 1, 2, just 3 triple divergence when you're making a triple top after 8 or 9 leg counts up. There's just absolutely no reason to be in the market. I also said at that point in time, there'd be a resolution to this sideways phase because we were nearing this time cycle inflection point. And that's when we got the trend leg down, right? But this went from markets moving a series of thrusts and corrections. Now we've corrected. We've corrected into the context of not even touching this yet. I mean, for this to be a confirmed bull market again, you'd have to break the past swing high with conviction, which would be 97,000. Then we'd have some type of inverse head and shoulders anomaly, and then but what's happening now is that, like I said, this momentum indicator has not broken above it. We've moved now sharply below it. We've confirmed that as well. It's been past Sunday. So, I mean, everything is now looking like the bear thesis is back on. And now everyone who was calling it, oh, this was obvious. No, it was not obvious to people that were living through it, that had to deal with a lot of ridicule and energies and other things and whatnot. So, like I said, even looking at the weekly Gaussian channel, this red line wasn't even that mature yet. There was a lot of other things I believe I looked at with this Gaussian channel. Oh yeah, the Gaussian channel is where I looked for the inverse zero line reject. Only one time did it fail, and that was here. We were in a confirmed bull where it made an inverse zero line reject, and then it actually made another high. So just looking at this channel, the bottom of it acted kind of as resistance once we broke it. And we are on to get maybe something like this, which would take us out to October. And we could even try to speculate on levels as well. As we go back to the daily here, we're going to be keeping an eye on the S&P 500. Right now, making a double top now with a bearish divergence. Pretty pronounced. We've made yet another. See, here's a divergence right here. We've made a higher high in price, but yet the CCI has not. Now we've made a double divergence where it's now tried to, or at least retest this high. It should be at that level, but it's still lower than this high. So a triple divergence. Obviously, right, this is a very strong zero line reject. For day traders, you would go long on this day. This would get a weight times 2 on your daily call scale into this moving average. Same thing, like once we go sideways here, and if we get a balanced breakdown and then break this 20 MA, in my opinion, the bull market is over for a bit. It's kind of the same criteria I had for Bitcoin. Um, Now, there are different contexts because we're in a confirmed bear, and this is a rally into that. And this is a confirmed bull that could potentially now get overextended now. So it is different. So keep that in mind. But it's the same thing. This 20 represents this rally. Breaking this sideways now has now confirmed the bear flag, bigger picture pattern, the ascending wedge, also bigger picture pattern embedded in it. Um, so yeah, not only did this test the moving average, we sliced through it, and if it closes in the next hour with a strong close like this for the bears, then we not only have that, we also have a bearish engulfing candlestick pattern, which has taken out 1, 2, 3, kind of like almost 4 days worth of data, now making new lows and breaking these lows. So very strong give back Friday today for the Bears. I know 2.36% isn't crazy, but it's where it's happening and the structure that it's breaking that is important here. So, is there any hope for the Bulls now that we've seen so many things on the CCI, this inverse zero line reject? We had the trend line acting as resistance that did not break out. Sometimes posing an if then scenario in the opposite of what you want or betting on or think is going to happen. So I didn't say if it fails here, it'll go down. I said if it fails to break out. So I basically gave you the setup for the bull scenario that we know that if the setup fails, then it goes the other way. So that was the idea behind it, that if we didn't break this trend line that we were going to have now another leg down, and we did this. I hope everyone sees how well this CCI works. I don't see anybody else on YouTube using a CCI like this with Bitcoin for day trading. It really can tell the story from a day to day. It doesn't tell the story week to week or month to month. That's we zoom out on other ideas, for, like the indicators I just showed you on the RSI. But if we just look at multiple time frames, we've had multiple bearish divergences for Bitcoin on multiple time frames, whether it was the daily, the 2 day, the weekly, etc., and the 5 week. Okay, we look at a variety of different things. Even the things that investors are concerned at will be factored in from a top down multiple time frame perspective for day traders. So if we go just weighting different things, if you faded this one, you now had a minimum double bottom criteria on the 15. That's not a wide hourly, but at least it's something. I'm just trying to show you how execution can be different. All right. Also, the way that we came down here went sideways, and then it was pretty. What time was this at? This was at 9:30. Okay, what time was this at? 11:15. The other thing too is that sometimes when a big move happens right at the open, that's when it's gonna resolve itself. Meaning it's got enough, it's moved enough in the day where it could reverse because there's enough left on the day. But at this moment, just think about time of day. This was at 11:15. The intraday bias from the RTH had already been open for 2 hours. So these are some of the intuitional things that I didn't discuss, why I got out of this and didn't want to sit through it. Um, we, just from an hourly perspective, there was a little bit of a buying tail here, at least on the second hourly, you could see a tail. We didn't really get that. We got a tail here and then a tail there. It just looked real heavy. So when the sustained momentum is against you and you do not have a wide double bottom on the hourly, then you should, you slow down with your execution, right? Like fading here for a counter trend thing, which you shouldn't do, but just the idea that if your idea is that it's short term exhausted, this would have better odds than here because it's more exhausted. It's more towards the end of the day. If you want to, it's really best not to fade against the intraday bias and sustain momentum trend. If you can see that there's a clear, strong move and you got to think who's going to be in control of the day. Usually things will start to resolve in the next day. Like if you miss the up move and you're thinking about shorting against a trend up, wait till the sideways day happens into the next day. You could see that how well that could work. I mean, like for instance, here, let's say you had the idea to short this zone. So if you shorted right here, you would have been shorting against a bullish intraday bias because the bulls were in control that day, at that moment in time. And potentially even we'd have to look at even a smaller time frame, the momentum. Not crazy momentum, but yeah, I mean, the intraday bias and who's in control of this day, bullish. Uh, and you at best you got a tradable reaction to the VWAP. Now, if you knew who was in control of the day and you wanted to keep your idea of maybe shorting one of these zones relevant, now you go into the next day. The often when you have a thrust up and then it goes sideways, you're going to get another thrust up intraday because it's called a double distribution trend day. It throws people off because they can't see the trend, but sideways trend up towards the day. So this was a day that was like a very weak trend day, not like higher highs and higher lows, but we understand there's different types of them. This is called a double distribution trend day. They're more frequent than the pure trend days because they're less powerful. So if we understand that we were going to be fading against sustained momentum, although not crazy, and bullish intraday bias for sure, then maybe we'd want to wait to the next day because once the trend ends, it'll start going sideways in the overnight session. So what did it do? Here's the overnight session for me. Once this is 8 o'clock, these vertical lines, then it starts going sideways at a really good zone. So if I could start having a double top based on the market context and daily call within a key reference area, see how it increases my odds, and then I can have a stop up here. These are execution secrets, really. Because we could talk theory all day, but unless you're executing right, it doesn't freaking matter. I mean, watch that ghost mode video to see how hard it is for me to do this publicly. I think I would take off to the next level if I went ghost mode too, for real. But whatever, flow state is flow state. So, right now, this is not a wide double top. This is a wide double top. This was at 1345. Did we? I can't remember if we shorted that or not. But just to show you different setups, like this was just top building. You got this move, and maybe you would have got stopped out and maybe shorted again. Or if this was your first target down here, then you have to wait through this. Stop is still up here. Then you take your profits here. Shorting here, right now you have a very wide double top. That's even better. That'll show up on the hourly chart. Is here. Obviously, into the next day, even this recent momentum would calm down. You get a better entry here. Not necessarily from a level perspective, but from a time perspective, because markets move in a series of thrusts and then corrections. So if you fade a strong up move, maybe it doesn't go down right away, it goes sideways for a while. And you have time to get in with a better time-based entry. This was at midnight, though. Okay. Once this zone was broken, but notice that it was still relevant because once we went back underneath it, it acted as a resistance zone again. That's when you know you have good zones. This is a zone. These two are zones. This is a wide zone, right? So it looks wide, but it's actually, less than 400 or 500 points here between this one and this one. So my zones are pretty good. I mean, even this zone here, right? It did get a little bit of a bounce. Nothing crazy, but you could at least, like me, play defense. You get out with a small loss, you break even kind of a thing. Rather than, having your stop down here and taking a 1%. Who wants to do that, right? You have a high volume node touched here. But we knew from the daily that odds were that this was still slightly because of that zero line reject now, inverse daily call, right? We were fading against the longs were going against that inverse zero line reject. So it really showed that the momentum had reversed at that point in time. You don't just use the CCI at the end of the day as a day trader, in my opinion. I mean, I didn't wait to the end of the day just to call this zero line reject intraday. I was basically saying that this was probably going to reverse now and won't even get to the high of the day. That's why I wanted to short the VWAP. Also, that was the reason I got out of the long really quickly because I knew it was a bad idea looking at how strong this was on the day. So it's not only how strong it is, it's the context of how we're doing it. Why can't this be the first leg down out of this balance? And now we pull back and now we're going to go have a second leg down that really starts to look something like this. We might be going down towards, let's get, and to be a bear flag, it has to be parallel channels. So you can see this one kind of brushed with breaking it, and then it broke underneath it, and then there was also this rising wedge within it. Where is the next stop? Right here, right? That was the next target, right? Boom, acted as support, and then we broke it. The next target right here is around, this is seven. This is only 5,000 away. We've went from 83 down to 5, so we've dropped quite a bit. Like we've dropped 8,000, and it only is going to take 5,000 to get to the bottom of here. So this is very bearish, right? This is the trend line that we held, the inverse zero line reject. You guys, it's all in that CCI Bitcoin adaptation booklet, how to use the CCI. And I don't think CCI is God, or I figure out now I use this thing and now it's the best thing ever. Like you got a tool, don't make it into a God-based thing. You know what I mean? Like this, drawing support and resistance zones are a tool based on key reference areas, but we didn't just blindly fade it because now the momentum cancels out some of this trade location. You see how everything kind of would have to balance itself out. Now, tomorrow I'd have to do a little bit more of analysis, but I'm obviously looking more towards, like if we don't get some strong tail, then it's not going to be sideways. If we close pretty low, then it's like, closing near the low here where it's like becomes a balanced breakout pattern. Now we have short-term bearishness now. So like this could potentially now start another leg down now because it rested enough in the short term. So the short-term bias got a couple of days of rest, even some up moves from around 76 to 78 something. And now it's enough for the downtrend to resume itself. And we're going to go down now here and test 70, 71 on the bottom of the bear flag. And yes, ladies and gentlemen, odds are we are going to break it because why is it any different now? I mean, the institutions got involved and everything's supposed to be different. I don't trust institutions. They want the same buy-ins, they want to buy low and sell high like everybody else. So it's like, they're just going to be better traders than retail. That's why we didn't have an alt season. Only retail keeps buying when it goes up and up and up. These guys want to crash it and buy lower. So, I mean, if we just clone this leg, we can easily get now to 47,000, which would be like probable. I mean, it would be probable. I mean, they usually drop 90% to 80 to 90% from the all-time high. I mean, 60 something thousand last time to 15. Just do the math on every single bear market. It is a violent drop. There's always these insane rallies for the bulls within them. So, this is a case scenario. Where am I getting these more bearish targets based on what I just said? And I'm just using parallel trend line extensions here to just project, a time-based target. This actually works pretty good because it takes us into October. So let's say we come down here. There's some buying here. Um, I wanted more data, but it kind of got rid of what I was doing there. And then we start going sideways here for a bit, hit this, and then we can. I mean, that's how it would get to last. You know, if you just want to visualize something, what it would get to last bear market's low. Now I don't know if it'll get that low, but another leg down, hitting the bottom of the bear flag, and then potentially breaking it to 48 to 50,000, very much in the cards. We start building some support here at the bottom of these lows where we had some structure and some tails. Then we could basically hit on the bottom of this trend channel. We're in this kind of channel now, and the more this plays out to confirm the 4-year thesis, which hasn't failed yet, the greater the odds that that's going to occur, and then Moon Boys are going to be wrong about the anomaly that we're in. I just feel like they just trade on emotion and not what's on the charts. I mean, we should just be looking at the charts only, not thinking, well, 4 years ago the traders were retail, and now, or 4 to 8 years ago it was all retail. Now it's going to be mostly institutions. That's not really part of our system. We can kind of view social market terms, but the charts are going to show the charts. Just because it was up here and everyone, was buying and there was supposed to be a lot of institutional volume coming in and this time was different, it still didn't take away from the fact that we were testing for the first time in a bear market the 200 average. And the last time we did that was in 2021, and that marked the actual peak before we had another huge crash. But what am I going to bet on? The beauty principle of how the charts behaved previously when this phenomenon manifested, or the fact that there's institutional buying and they're supposed to keep buying? Well, you think they don't sell? They do sell. They sell quite a bit. They probably sell in the over-the-counter market, which wouldn't necessarily even show up on the exchanges. They buy virgin Bitcoin that's never been on the exchanges directly from miners at $10,000 quantity minimums of Bitcoin, and they will do that in private. So I'm not going to switch my ideas just because there's institutional buying. I mean, the OGs are institutional level. They may not be institutions in the traditional sense, but why can't, quote, institutional OGs start selling? Because even though everyone talks about inflation and our dollar this and our dollar that, cash is still king. You're still going to get more volatility in these digital assets than you ever will in our counterfeit inflated currency, which, by the way, you can add to inflation. Shrinkflation, they use the same size packages, but you're like, why is the chip bag half empty? What the heck? Or, you dog food, what the heck? It's all this air in it. They actually banned that in Germany. They can't do that. False advertisement, but it's all over. It's just insane. And then, on top of the shrinkflation and the inflation, the increase in prices because they counterfeit money, and the shrinkflation, even less what you get in the lies about it, you get shitflation. It's basically when the products become filled with hydrogenated seed oils and GMOs and all these things that make you sick. So there's a lot of wickedness right now in high places in now what has been manifested as a low trust society. So if we have manifested the energy of a low trust society, are you going to trust Donald Trump's son, who said when it started to crash, this would be the last time you'd ever be able to buy below 90,000? Right? That was back up here, right? Or are you going to trust the principles in the system because you can see that they are archetypes that will work more often than they will not work over a large sample size of ideas? What I just said is the best we can do. That is it. This daily call system is a matrix toolkit to siphon through a low trust system. I mean, how many people trusted the influencers of these coins who don't give a shit about their token holders? Unlike a stock, their board of directors have absolutely no incentive to their shareholders. So we have that fundamental problem, firm specific risk. No alt season because the .com energy happened, but there is going to be a opportunity to buy Bitcoin again. I mean, here's a coin that no longer is alive and well, and LTO is another coin that isn't. So don't trust all these people that talk about how now, Tao is going to flip Bitcoin and all this ridiculous emotions. They trade, think, and feel on emotion. When this bounced up here, part of me just was like, just throw a huge five figure. Wait, one, two, one, two, three, one, two, three, four, five. Yeah, I was going to put five figures just because this went up. That was the emotion. Then I did an analysis and I was like, oh, wait a minute, this thing's going to reverse. What am I doing? It's just because I looked at Sweet for a second and it was at a low price and it went up 20%. Guys, calm down. The system will calm the emotions down from these horrible ideas. Now look at this inverse zero line reject. Aren't you happy that you aren't long because you chased a breakout candle into the 200? I mean, this is what we're dealing with. Same thing for Bitcoin. We are not out of a bear market yet, guys. This is going to turn into an absolute, mark my words here, bloodbath. This has the potential to turn into a bloodbath, a bad one. And you can feel that when the larger time frame bias switches, you can just feel intraday. You're just not going to get the same bounces. I mean, it was tough to be short against this when the bulls had the larger time frame bias rally. Now that we broke the ascending wedge and the bear flag held in the 200 beauty principle, blah, 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 all that stuff from the last 2021, sideways down breakout, it is hard now to be long because you can just feel now the shorts have taken over. And that's just how you have to be sort of nimble in your thinking and get in and out, long and short, as a day trader. As a portfolio manager, we have to be patient, realize cash sidelining is our greatest weapon as portfolio managers as well. We're not going to short a huge amount. We're going to short on our income producing trades, but we are going to sideline in cash, aka Tether or whatever, USDC, whatever cryptocurrency you're using. Could be cash, I guess. Wow, look at the Bitcoin sentiment. Holy I told you guys. Remember, this was like it was near it was just getting near 100% most of the time, 80. It was due. That was part of the reversal that when it was hitting up let's see. When it was at max euphoria, this was hitting, 80, 70s, hundreds percent, indicating, hey, this thing might be getting overdone. And now you can see it's now confirming it following price. Just take that with a grain of salt. I don't really use that too much. Crypto total market cap excluding Bitcoin and Ethereum. I mean, yeah, nasty double top. Really bearish candlestick pattern. And the whole market is feeling it. Now, some of these privacy coins getting a boost, hiding some Bitcoin profits in R maybe. I mean, even this was making huge moves. Now giving it back up because we're just not there yet. Yep, ton. People are happy. They're taking profits. No, people aren't stupid. They don't hold to $50 anymore. I mean, this went from $1.30 up to $2.90. People made a lot of money. They're going to be taking profits in a bear market. Well, I might be, like I said, I'm going to be covering tomorrow. Maybe I'll post a live. I'll do a live event tomorrow or something if someone wants to join on. Just because it's been crazy to get a coaching call at those different times of what's going on in my life. So there hasn't been any questions or anything sent in. Hang on a sec, guys. So yeah, no one really was here to ask questions, so I might show up tomorrow if people are around in the room. Do a Q&A if people want to send in some questions or whatnot. So, all righty. Well, hopefully this is a good debrief of where we are, where we're going. It's confirming what we've talked about, and we will be there to buy up bargain prices. All right, guys, take care.